Today I'm going to show you how to use the second method of charge out, which is also a manual charge out. Manual charge out means you have to do the entries manually instead of going to the automated process, which is the third method, which I will cover later on. Now in method 2, the advantage of this is it overcomes some of the limitation of the method 1, because in method 1 you need to create one development cost account, one single account where floating deferred expenditure balances are transferred out of and into this development cost. The purpose of this development cost is to have an expenditure account without the charge out identity, so that if this is not flagged as charge out, then any transaction posted here will appear in your P&L. Otherwise, it will be posted directly to your deferred expenditure account. Now in method 2, you have the choice of breaking down your expenditure. That means there won't be one single account representing all the expenditure. In this second method, individual account will have their individual balance shown as charged out. Although it seems like method 1 has the limitation, but the development cost total are adjustment provided by the auditors where they may not have a breakdown. And also in development costs, that total can be supported by the detailed project ledger. Now in method 2, before we start, I'd like to show you the trial balance. I want to touch on the deferred expenditure date -KS instead of -KB. Okay, right now -KS is 0. So likewise, there's nothing in your balance sheet as well. I'm going to create an entry. Now prior to the charge out, we'll probably have some transactions on a monthly basis. For example, you might, let's say, want to make payments to SATA on roadworks. Maybe this costs you 40k. So this is important. Yeah, I'll put something more relevant to it. Let's save this voucher. Don't worry about this because the date that I put does not correspond to the period that I log into. Never mind, it will do the adjustment for me. Now 3 is period 3. Now since I log in as period 1, and because they forced me to 3, because my date is dated period 3, so they will change my period from 1 to 3, and that's why they remind me it will move it. You see, the voucher not enriched, the period adjusted to 3 from 1, and it will appear in period 3 when saved. Okay, I can come back here. These are the transactions that I entered so far. Here I have this. And here I have this, and here I have this. I'm going to post all this. The purpose of entering these transactions in the cash voucher is to show some of the amount reflected in your balance sheet, so that when I do charge out, you'll be able to understand better how 107,000 is derived at prior to your charge out. Likewise, 61,750, you may not understand how you arrive at 61,750. So when you have this accumulated, then when you charge out, then you understand more why certain percentage will be charged out. I'll come back to that later on. Now method 2 is also a manual charge out, similar to method 1. So at the end of the year, if you want to do a charge out, you must go to the ledger style entry. You can't enter this entry in your journal entry or your journal voucher, because when you enter through them, they will force you to enter values in your project phase and block. Charge out do not require you to enter project phase and block values. If you have those values, it will not be posted to your P&L. It will be posted to your deferred expenditure account, and we want to avoid that. Deferred expenditure KS. Now I'm going to deduct this out. We'll charge out 70,000 to this, and the balance of 37,000. We'll go to this 7015. Okay. I'm going to post this. Now this is a manual method of charging out. That means what I did is I reverse transactions in the balance sheet, which is 107,000, into, that means I'm transferring this account KS. Now it becomes 0. Originally it was 107,000. Because I reversed 100% of the amount, it becomes 0. What happened? It will be shown in your profit and loss account. You can see 70,000 and 37,000. This was the previous method of transfer. So using method 2, you have the choice of showing your breakdown of your charge out, because some company do not want to see just one single development cost account.